This is Digital Perspectives with Brad Kimes. Subscribe for new content notifications. Now, here's Brad Kimes. Come on in.
Welcome back to the show, everybody. You can follow me on Twitter at @BackupBradleyAbove at the top of the screen, and everything that we're talking about here, most of it anyway. So today we had the conference or webinar with Brian Brooks from the OCC and Jay Clayton from the SEC. And man, oh man, was it straight fire. And we're going to hear about the innovation and regulation and the working together in collaboration to make sure that they have the right framework in place to not hinder innovation. And my goodness, there are so many good little spots that are in here. I had to spend all this time since the conference marking it out. And then we're going to hear from a real boots on the ground companies that are doing and taking advantage of this window of opportunity because of this recent letters from the OCC allowing banks to custody digital assets, allowing federally chartered banks to hold reserves for stablecoin issuers. You know, all of this that has unfolded, even the recent SEC news where they said there's a no action letter on security tokens or alternative trading platforms. So let's go ahead and get started. A lot to do. I want you to have all the hot spots that were in it. So let's go ahead and do that now. And let's see, it is at 1:40. So let me go ahead and I've got it right here. And this is the first soundbite here where they talk about innovation, regulation, and a time-tested framework. Listen to the way Jay Clayton says this when he rolls this out here. These guys have been thinking about this for a long time. Check it out.
Areas for this discussion today. The first being talking about innovation under a mature regulatory framework. I think, listening to a number of your presentations and comments in the past, there's a recurring theme in both of your approaches to innovations in the digital asset space, and that is that innovation can flourish while still complying with our respective regulatory frameworks. Now, Mr. Clayton, I've got about 10 pages of statements from you, since you became chairman of the SEC that really reflect that theme. And Mr. Brooks, you've been quoted quite a bit in recent weeks, and you've also been consistent in this messaging since really joining the OCC. So I guess a two-part question to this larger question, are our current frameworks sufficient to address new innovations and future developments in this space? And then are there particular areas of our current framework that are problematic for you and that could potentially require legislative efforts to address in order to spur innovation forward? So, Mr. Clayton, let me start with you, and then Mr. Brooks can piggyback on top.
Sure. Thank you, Jackson. And the short answer is yes. Our regulatory framework, the principles of our framework, it's time tested, and it's been time tested through many innovations. For example, if you talk about trading today, all trading is electronic. Our exchanges have gone electronic. Every trade you do, if you call your broker and say, I want this, it gets routed through an algorithm executed, et cetera, electronically. That was not the case 20 years ago. It may very well be the case that just as you had stock certificates and now you have entries, digital entries for representing stock, it may be very well the case that those all become tokenized. But you have to stay true to the principles, which is people who are distributing stock, people who are insiders of the companies for which the stock has been issued, they have responsibilities. And one of the problems that we had was we got off on the wrong foot in this innovation. There was the theory that because it was so efficient, because it could have had so much promise, we could toss aside some of those principles of responsibility and transparency. I think now, 3 years later, 4 years later, we are in a much better spot, and we're seeing the promise of blockchain technology, distributed ledger technology, bring efficiencies to that, what I say is time-tested framework. With that, let me turn it over to Brian.
Well, look.
Well, before Brian gets going on his response, that is a big statement on Jay Clayton's part that he's talking about blockchain and distributed ledger technologies, and that whole idea of embracing them because they can bring efficiencies to the markets and the networks. Listen to what Brian Brooks says to the response here.
First of all, thanks, Jackson, for having us both here. I think the fact that you've got the OCC and the SEC sitting in the same room talking about this tells you a lot about the maturation of what's going on here. And I honestly couldn't be more excited about the partnership between our two agencies in terms of not only seeing these issues as enforcement issues, but trying to also show the other side of the coin. That's the title of today's talk, right? There are some things out there that have been sold in ways that I think are problematic under securities laws and other rules. And there are also some things here that would be good for America to invest in and lead in, right? And I think we have to show what we think is good and safe, and we need to lean into those things in the same way that we enforce the things that we think are problematic and have disclosure issues, and that's, I think, what we're trying to do together. I think from the OCC's perspective, I think a lot of the maturation of the crypto industry is about thinking about what this stuff is about, right? And I think that anybody who's worked in the field knows that the original concept of Bitcoin and all of these other innovations was not supposed to be to create some made-up investment asset. God knows there are plenty of things to invest in, right? Plenty of derivatives contracts and equities and other ways of accessing volatility if that's what you're looking for. You don't need to make up something on a computer code to invest in if that's what you're trying to do. We think what's going on at the OCC is something more fundamental than that, and it may be challenging to the existing bank regulations, which is why we need to clarify them. But what we think is going on is the idea that networks are fundamentally more resilient and efficient than vertically integrated sort of control towers, okay? And historically, the way that financial intermediation happened in this country was that you had these central control functions administered by banks as the underpinning of all of finance. There were basically single points of failure. And if a bank went down, really bad things happened, right? We saw that in the financial crisis. All it took was one Lehman Brothers and the end of the world as we knew it arose. Same thing if a bank data center gets taken out in a hack. That bank may be unavailable for days, creating chaos in markets. Networks don't behave that way. And what crypto tokens are fundamentally about is they're supposed to be the assets that are powering networks. They're the things that are incentivizing people to connect to the networks, such that the functionality of the network, like the internet, becomes very stable and resilient over time. So we see this as more of an infrastructure issue than an investment asset issue in its maturity. And the reason I think that people have seen what they've seen from the regulatory agencies is that we haven't achieved maturity yet. And so in the early days, you have speculators, right? And you have people trying to take advantage of speculators. But in the mature phase, what you have is a radical new payment system that may be...
Whoa, a radical new payment system. Now listen to what they're saying there. Networks are more resilient than siloed controlled towers. This is more about infrastructure issues and not asset investment issues. Pretty remarkable. Listen.
Be better than existing payment systems, which are built on antiquated technologies. And since the OCC is in part the administrator of the banks that operate on payment systems, we have a strong interest in trying to envision a medium-term future. Not a tomorrow future where people are speculating on Bitcoin price movements, but a medium-term future where these blockchain networks that have been built are basically the internet of finance. That's where I think this goes. And that's kind of a mind-blowing challenge to the banking model. And so I think our responsibility as regulators on the bank side is to get out front of that and help chart a course that shows that there is a future for banks in this world, that banks play a critical role in this world, and we need to establish a framework around it so the ways they connect are safe and sound.
Wonderful. I tell you, it's remarkable. And throughout this whole thing, I want you all to remember Glenn Hutchins' words when he made the comment of understanding this space and crypto and protocols and blockchain. And he had said that, the value is in the protocol, not the token. In fact, the price of the token is uninformative and a distraction. Because what I hear Brian Brooks speaking to greatly here is exactly that. A new payment system, a radically new payment system. I mean, this is remarkable to me because it speaks to the blockchain, it speaks to the protocols. And then you can see that price eventually over time reflect through the token. Let's go now to another time marker here all the way up to 9. And this whole thing is amazing. And guys, if you haven't joined the monthly newsletter, I'm holding it back. I'll be letting it go this weekend. So get on that newsletter if you want this full piece from the conference. I will have it for you and so much other material. So make sure you get on to that newsletter. Here we go. This is going to talk about the maturation and the security issues. And I believe it's Jay Clayton speaking here. Let's hear.
Yes. Okay. And where can we be clear that it's not a securities law issue? That's a lot of what Brian and I, and thanks to our great staffs, have been talking about over the past few months. And how do we in the payment area, the maturation in the payment area, how do we make it clear to people that if you're not trying to finance your network, you're not trying to give people a return on your network, it's probably not a security. But if what you're trying to do is finance the build out of your network with your token, or provide people with a return for using the network with your token, you look at the traditional test of security, it's pretty clear it's a security. And we're working to make it clear where those lines are so people can mature the payment system. I don't know, Brian, is that a fair way to describe our relationship?
I think that's exactly right. I mean, look, the collaboration we had, just start with stable coins, which is the first thing that we've done together, I think came out of a view that, look, Jay is not the security silo and I am the lending and deposit silo. We're part of a group of regulators in the government who are charged with maintaining a strong, robust financial infrastructure for the company, right? We oversee the financial system. And there are different ways people access capital and credit in the financial system. Sometimes they choose to take a bank loan. Other times they issue a debt security. It's fundamentally a fungible thing, right? Sometimes people buy an equity. Sometimes they do something else. And I think we came together around this based on the view that the country would be a stronger economy with less friction if our payment system worked better. And one of the things that can potentially help innovate the payment system and make us more internationally competitive would be leaning into stablecoin-powered blockchains. So Jay and I spent some time talking together and said, hey, on this issue, we have a strong alliance of interests where we both want to see American leadership. We both want to see a payments network that is as strong as China's or the EU's. And one way to do that is for us to say that banks have the authority to participate in these payment networks, and for the SEC to say, hey, stablecoins that meet certain conditions outlined in the OCC's letters may well not be securities, so come to us and we'll give you clarity. That's a great way, I think, for government to do what it does best, which is to provide framework rules within which industry can innovate and flourish.
Really great remarks there. And I have to say, there was another spot that Brian Brooks talks about the early days of the internet and being very careful that whatever they come out with, whatever regulations or framework that's released, is that they're not picking winners and losers by doing what they're doing, and to let the markets decide. Now let's go ahead and move this up. Again, this whole thing's incredible, guys. Get on that monthly list. I will be placing this in the newsletter for everybody to enjoy. Here we're going to listen and talk about closely coordinated response from the regulatory agencies and how they work together, and about how America's strength is really letting the markets decide. And listen to the way they lay this down. This is pretty strong stuff here.
The U.S. system may be fragmented in the sense that we have more regulators dealing with finance than some other countries do, but you'd be surprised how closely coordinated we all are. There are various vehicles by which we all sit together and do make policy judgments. We have the Financial Stability Oversight Council that just met last week and discusses important issues together. We have the President's Working Group on Financial Markets that's looking at crypto, among other things. And so you'll get a coordinated response out of us, I think, better than most people appreciate. But what I would tell you is the most important strength we have in this country, which a lot of these countries that have unified regulation don't have as well as we do, is we have a strong philosophy that markets rule in this country, and our role is not to command and control the economy. Our role is to create frameworks within which markets can function. And so I've said over and over again that the most important reason I'm trying to address crypto at the OCC is not because I have a bias in favor of crypto. It's because there are 50 million people who own this stuff. And so it's important for Jay to make sure that what they're buying is real and disclosed and registered and all that stuff. It's important for me to recognize that this stuff sits inside the banking system today and we need some rules around it. But at the end of the day, the thing that is America's strength and the reason that we are the most innovative country in the world is precisely because we let markets decide, right? To my point about the New York Stock Exchange companies going bankrupt, the New York Stock Exchange does not refuse to list a company because they think the product is crummy, right? They let the market decide if the product's good or not. They just have a set of rules about disclosing what that thing is. And that's what we're trying to do, at least what I'm trying to do today, is to let markets decide what they want, and then we'll decide what's legal to maximize the ability of market actors to make their decisions.
And let me just say, I think we both will let the market decide, but we both recognize that there are efficiencies that can be added to the market. How the market, but there always are.
Listen here, he is speaking directly to using blockchain here where applicable or distributed ledger technology. He is acknowledging that there are places where they can put this in place, a new payment system, a new way of settlement. That do not kid yourself. This is exactly what this conversation is about.
Now, that's the beauty of this, and I am sure, I have no doubt. One of the things that always comes to my mind is security interests. Security interests are incredibly paper intensive. Anytime there's a refinancing, the filings that have to go, around the states and whatnot, and any of the leveraged finance lawyers on the phone know this area where digitization could add a tremendous amount of efficiency.
Whoa! Digitization could add a tremendous amount of efficiency. Now, I remind you that just yesterday or the day before, we had the Depository Trust Clearing Corporation talk to us about going to complete digitization for settlement and getting away from paper settlement for U.S. securities. The DTCC settles $2.15 quadrillion a year. Let's keep going. So we move now to 34 minutes. And don't forget, we're going to still, as soon as we get done hearing this last couple clips here, we're going to also hear from Vesto and Coincover. And wait till you see the level of excitement from them about what all of this means as a potential. And then we're going to look at a visual diagram to help us understand exactly what's taking place here.
I don't know, Brian.
No, look, I couldn't agree more. One of the things that I found surprising when I was actually working in crypto land was how, an industry whose underlying product was designed to make things simpler and faster made the policy side of it so needlessly complicated. So there were multiple different groups getting together saying, well, we need an SRO. We might need 2 SROs at one point, somebody said, or possibly a whole new government agency or a commission. Listen, the point of crypto, like the point of all innovation in any area, is to take aspects of life we've lived our whole lives and just make them easier. So we didn't need a new commission when cell phones got invented. We had an FCC, and they adopted a rule around cell phones, and that was fine. And here we are, and we have lots of different kinds of smartphones out there. I think it's the same thing here. I don't know. I'm now just reiterating what Jay said. Keep it simple, stupid. This is the people who've been successful in D.C. are the people who remember, keep it simple, stupid. Okay? If you're trying to issue, rights in a venture, like Jay says, that's equity. We all know what that is. I think security tokens are great. Jay's agency has now issued guidance about, crypto ATSs and custody, and now there's clarity about how that's supposed to work. Fantastic. Some crypto tokens are about value transmission and payments. We've issued guidance around that. I think it's not in the industry's interest to have a whole bunch of governance organizations around this. It's in the industry's interest to do what they do well, which is invent product. Okay? We will try and create clarity around legal frameworks using the tools we've got, and I think we're moving faster than the government ever has before, so that's the great news. But industry is great at building product, and that's what it should do. Government's terrible at building product, so it shouldn't, but it should set rules. That's what we're good at.
Well said, Brian Brooks. Now let's go back because I actually went ahead. I want to take you back to this spot right here. These last two are absolute hot spots. What's one of the regulatory agencies we have talked about here quite often, which is FSOC, the Financial Stability Oversight Council. The person emceeing this talk, shout out to them for even bringing it up, and ask if they would be if it would be necessary to hear from some level of agencies like FSOC, which is above. I mean, you can hear he's just like, would this be an FSOC level kind of a situation where we would need to hear from FSOC? And you will be surprised at what Brian Brooks says in this statement, because I really feel like Brian Brooks acknowledges that, yes, in fact, we will be hearing something from FSOC, which will be the greater kind of federal broad policy framework from a federal government level. Not that the OCC is obviously, the OCC and the SEC are, federal agencies and the whole bit. But the reality is FSOC is going to, I believe from his statement, we're going to hear from FSOC when it comes to crypto and these blockchain protocols and things. And I firmly believe that that is going to be very good for XRP and the XRP ledger and the ILP. Here we go.
Even before that is, do you see more cooperation ahead between your two agencies? And, how do you see U.S. regulators kind of moving forward on a more coordinated approach? Does it have to be at kind of that FSOC level in addressing some of these issues, or as you guys mentioned, it can be an agency by agency basis as well? Jay, let me start with you, and then Brian.
Sure, and I think you outlined the answer, which is in some cases it's bilateral. We've done a lot of bilateral work, and that bilateral work will feed into work at the Presidential Working Group or at the FSOC or otherwise. There's no set structure for coordination. We have a lot of structures that facilitate coordination, but as things come up, look, Chairman Tarbert over at the CFTC and I, we have a standing call every Monday. Some days it's a half hour, some days it's 10 minutes. But where are we going to be better if we resolve things at that level quickly? So there's a lot more coordination. You see, we certainly don't announce every time we talk to each other. That would be quite cumbersome. But there's a lot of discussion.
Yeah, I think that's
okay. So now I want you to listen very closely, because now we're going to hear Brian Brooks address that same question about the FSOC level response to what needs to happen for a regulatory framework. Listen very carefully to his words here.
Absolutely right. I mean, I think that broadly over time, it would be good, in the same way that the government as a government has a policy on things like housing finance, it'll be good for the government to have a broad policy framework for this kind of stuff.
That there is a flat out yes. He's asked, do you think we'll have to see an FSOC level kind of response from this? Jay Clayton, skirt the issue, bilateral if we need to, case by case basis. You know what I mean? Brian just basically comes out and says, yeah, roundabout. Let's just hear that little bit again. It's so good. Listen to this. But take in mind now, FSOC has been cited in the IMF document we covered back in August with Mickey B. Fresh on the show, where they recommended RippleNet could be used for cross-border payments, and that FSOC, that agency in the U.S., could deem something like RippleNet a cloud-based services platform, and with the governance and compliance built all into it, a SIFMU or a SIFME, which is a systemically important financial market utility or systemically important financial market infrastructure. And that is the conversation that they're lightly having here. Make no mistake about that.
There's a lot of discussion.
Yeah, I think that's absolutely right. I mean, I think that broadly over time, it would be good, in the same way that the government as a government has a policy on things like housing finance, it'll be good for the government to have a broad policy framework for this kind of stuff. But like everything, it tends to start small. You address the easy questions first because they're big and easy, and I think that's what we're talking about with these fiat-backed stablecoins. And then you get to more complicated questions like the Libra situation that you raised a few minutes ago. That's got a lot of other issues going on with it. And what do we think about that? That touches multiple of our agencies. At the end of the day, I think you'll see us address some framework questions as a government, and then you'll have single agencies and bilateral cooperation on things that don't have the same breadth of implication. But I think there are things you can expect to see coming out of us. I mean, we've already said a few things. We've said banks can custody crypto assets. We've said that banks can hold deposit accounts in support of stablecoins. Should we say something about banks' ability to plug into blockchains and actually issue stablecoins? I don't know, and I don't know what the right answer is, but I know the market's asking those questions, and we'll have to figure that out. Do we believe, for example, that banks should be node validators on a blockchain for other assets? Again, I don't know, but that's where these things lead, and some of these things are broad enough to mention that we'll coordinate on it for sure. That's what we do well.
Remarkable response. Now let's go right to the last thing here where I want to get down to it, and this is at 3744 here. And what's nice about this is that Brian Brooks makes no bones about it of exactly how he sees the evolution of this space as an advancement in banking activity. And let's just hear him say it. Check it out.
Having said all of that, when we look at the world of payments, what I've sort of said is historically we think of banks as providing three core functions: deposit taking, payments, and lending. We've seen in the last 10 years that it might be more profitable to offer some of those services on an unbundled basis. This is why, we have multiple $100 billion companies that are just payments companies. That business that they're doing was exclusively done inside of banks 15 years ago. Nobody but banks did that business. And now suddenly an enormous amount of the activities moved outside of banks. So that's kind of a big deal. Crypto is just the newest, at least certain aspects of crypto, the newest evolution of that trend. Here's a way of offering that service, as Jay says, way more efficiently. But let's not kid ourselves. It's still a banking service. That's what the word means. It's a kind of financial intermediation that allows you to pay me for some service I provided you. And at some level, I think it's important for me as a functional regulator of banking activity to extend supervision and charter authority to that activity. And crypto is just an evolution of that same thing, I believe.
Unbelievable. I mean, these guys just laid it down. Now, let's go ahead and change gears because how does this affect the companies that are out here with this innovation in tech? Let's check it out because we have Vesto here that I talked to just the day before yesterday. And this was a really great conversation. I'm only going to grab just a couple spots out of here for you. And I want you guys to know what's going on here. So let's start it right here and just understand very quickly what Vesto does. And then we'll listen to what Coincover does as well. And then we'll listen to the big question that we got to ask, which shout out to Digital Asset Investor for this. When can people, regular citizens, consumers, not retail speculators and or not speculators and retail investors, when can regular consumers walk into a bank and use this platform and be able to buy, sell crypto and have it custodied? So, all right, let's just take a look here real quick. So let's go ahead and hear this. There's so much happening in the regulatory space. We need to reach out to companies that really understand what's happening, and they're boots on the ground. They are building this new space every day as we speak. So I want to thank Vesto for being here. We have Travis and Karstens here with us, and then we have David and Demi here with us as well from Coincover. How is everybody today?
Good, thanks, Brad.
Great.
Very good.
Thanks, Brad.
Absolutely. Thank you all for being here. So I want to start with Vesto. Now, Vesto has been on the show before. I know the audience is familiar with Vesto and what you guys are doing. Very quickly, Karstens, if you would, tell us what Vesto is doing out here in this space and what products you offer.
Well, first of all, Brad, thanks for having us again. We're looking forward to be able to talk about what we're actually offering. But what we do is, in very simple terms, we provide a turnkey, ready-to-use crypto suite for banks and financial service providers. In other words, if you want to get into the crypto sphere, all you need to do is, take the Vesto software stack as a container, put it next to your existing core banking system, and you're ready to go.
Boom. Just put that stack next to your system and plug in, and you're ready to go. And just like that, the banks they're playing in the business of buying and selling crypto, and all the mitigated risk sits on Vesto, which has obviously got all the compliance and everything they need built into the platform right out of the gate. Now, for expediency, I want to move through because, again, I'm going to throw this into the monthly newsletter too, the whole entire clip for you guys to see. Make sure you get on that monthly newsletter. This is really great. Let's hear, from David from Coincover, who really is going to show you that they're the backside of custody for the banks. It's a beautiful fit here. And if you think about the conversation that we just listened to with Brian Brooks and Jay Clayton, and about how they're overseeing everything that needs to happen, the regulatory framework and structure and the current guidelines, just listen to what they're providing. These guys are putting it down. It's amazing.
And we can take care of that.
That's wonderful. So when we talk about that, Vesto being on the front end of this as a service to solve that problem for the banks on the front, we come over to somebody like Coincover. And David, I want to ask you, because in light of the OCC letter that came out, which we've had 2 now, by the way, right? So in light of that coming out, David, tell us, how you can help banks participate in this new crypto space.
Yeah, well, thanks, Brad, and thanks for the invitation to the show. I think from our perspective, Coincover, we see ourselves as the safety standard, the safety net for the industry for crypto, right? So, as Carson talked about, right, there's horror stories of people who may have lost access to their crypto, lost their keys, bought some years ago and then forgotten about it. And there's even worse stories about thefts and hacks and these things all every day. It's that sort of stuff that's interesting, newsworthy. People like to hear this sensational stuff. But the reality is it's putting an awful lot of people off. What we do at Coincover is, we call ourselves the safety standard, the safety net of the industry. So, it's great to work with companies like Vesto. They're super secure technically. So security is always important to us, and we only work with the best. So it's, highly secure, but you still need a safety net, I guess is the way that I would look at it. Systems are good, systems are secure. You could, I liken it to kind of, crypto could be like walking a tightrope. Okay. And, in partnering with Vesto, we think kind of the tightrope is more like a plank, maybe even a bridge, right, in terms of getting into the industry. And that's fantastic. But you know what? You're walking on this bridge, gust of wind comes, something might just blow you off course. You still need that safety net. And I think from Coincover's perspective, that's what we provide, in partnership with Vesto to the industry. So, whether that be kind of what we do from a deposit guarantee perspective, kind of similar to what you get from a traditional bank with FDIC, or you get theft protection in case something happens to your account. We're there essentially if the worst happens, you're not affected. And I think that's our kind of role in this, so that at the end of the day, you just need to think about the opportunity of crypto and not worry about the risk of crypto. So if we can help take away the risk of owning and holding crypto, and then you can start to think about the opportunity that comes alongside that. And we think that will be hugely encouraging and will help drive, much bigger adoption over the years to come.
Well said, David. It really is, what he's saying is really powerful, because listen, couple what is going on and what they're building and what they have to be able to comfort not only the consumer, but the banks that want to play. You think the banks aren't seeing that Kraken got a bank license? Oh, you better know they did. And you think banks are going to sit around here and be like, hey, we're just going to watch the rest of these crypto exchanges get a bank license like us and just beat us over the head with profits and in a sector we're not even in, providing products and services? Not for a second. Not for a second. So I believe that Vesto and Coincover have positioned themselves in a beautiful spot by having these platforms and services right there ready for them to do a plug and play and to get in the game immediately upon these regulatory guidelines and letters coming out that are allowing everybody to participate full bore. So now the question remains, when can people walk into the banks, a regular consumer, and use this platform with a bank? Let's go ahead and get to that because that's so exciting. Now let's go. And it's right here. And listen to this answer. I was shocked by this. This is so amazing to think of this. Now think of this. How long will it take for a regular consumer, they don't know nothing about crypto, to walk into a bank and be able to say, hey, I'll buy some of that stuff I hear people talk about Bitcoin. I don't know what to think about it, or XRP or Ethereum. You're right. Let's hear what they say. The big question that everybody wants to know is when can not just the retail investor in this space, not just the accredited investor or venture capitalist in this space, when can the regular everyday banking customer go to their bank and say, I'm going to buy crypto from the bank I've had an account with for 10 or 20 years? What say you?
Brad, I'd love to have my drum roll right now, to increase the excitement and the tension a bit. Oh, there we go. No, drum roll. I'd say middle of next year. Middle of 2021, we are, starting the first pilots going out. Right now, we're, very close to the end of discussions for the first pilots happening. We've completed the MVP a couple of months ago. So whoever is following us or wants to follow us on Vesto.io, please do so, because obviously in such a dynamic environment, new things are happening every week, every month. And we're quite confident that middle of next year, there's going to take off, and we'll be providing a large scale of investors with the opportunity of doing, safe and secured crypto transactions, and give the banks on a large scale and broad scale also the opportunity to join the crypto sphere without having to worry about their existing IT, because our solution provides a 2-speed IT opportunity and everything. So we're ready to rumble then.
That is pretty remarkable to me. Now, I mean, look, let's go back to the idea of what's happening here. So we just heard from Jay Clayton and Brian Brooks. We've been hearing from Brian Brooks, and he told us several weeks ago that you will continue to hear a constant cadence of comments and issuance from the OCC on the matters of blockchain, cryptocurrency, and the federally chartered banking system. Now that the SEC has really come out with their no action letter, really approving the idea and notion that you could make a security token out of any asset of value. So we're talking the game is now on. The floodgates are open. Jay Clayton himself has said that I believe the system and the frameworks that we have in place right now are time tested. And Brian Brooks has even himself said that when the cell phones came out, we didn't feel the need to create new regulatory rules and a whole new framework, a new agency to govern it. We just let the FCC know. They put things in place, and now we have cell phones of all kinds and types floating around here. And what an amazing analogy to understand where we're going and what the coins and the technique and the protocols of blockchain in the digital asset space really looks like going forward, because that makes a lot of sense to me. And I feel like, I'm going to tell you this, I feel like we're not far from a really transformative moment taking place in the digital asset space. All right, guys, I know this one went a little long today, but I wanted you to have all the sweet spots from the conference. Make sure you hit the like and subscribe, leave a comment below, and share with somebody you know. I'll catch all of you on the next one.